Good evening, traders. Adam here from Bullogic talking about a trade that we took today in QCOR. Now, this one didn't go quite the way we thought it would. I want to explain what happened and where we pretty much just went wrong and screwed up. Now, this was an intraday play. As you can see, it gapped up today. Had good volume, gapped up about 4.5%. Now, I like to put these stocks on watch. I alerted it on Twitter that I was watching this stock. It was one of my plays that I was going to watch into the morning, see if it's set up for a good intraday pattern, and then I was going to take the trade. So let's get down to the 2-minute chart. I like to use the 2-minute chart in the mornings just because it gives me a little bit more candles over a 5-minute chart. In the afternoons, then we can actually change it to a 5-minute chart and start seeing patterns set up like that. I'm not a big user of the 1-minute chart just because it is very noisy. I think at least the 2 minutes kind of eliminates some of that noise and make it easier to see what's actually happening. So as you see, stock gapped up, had good volume in the morning, nice strong green volume there, and then it just kind of washed out. So it had a nice big red candle and just kind of started pushing its way down and start washing out a little bit more. And it started muddling around in this area. And I was actually looking to take the trade at 2017, right over these two little spikes here. It looked like it was putting in a nice little bottom, coming in for a bounce. It had that 20-day moving average riding up, so I felt like it was a nice low risk entry, and I could be able to get a nice balance if it ran back to the highs. And I was going to set my stop here at 1974, right under this big candle. So if I knew if it took out that area, it would be below that 20-day moving average, and it'd be breaking down and trying to fill the gap. It might even be a better short at that time. So that's where I put my stop. I got in on this big candle here. It spiked up. Put my stop in at that 1974 right here at this bottom. And then I walked away, got me a drink. I came back and I noticed these red candles coming in. And when I came back, there was this big red candle. So I'm like, man, called it wrong. This is going to be a failed breakout. Let me just go ahead and get out of this and cut my losses. So I did. I got out, and the price I got at is 1977. So right here at the bottom, I got rid of my stop and I got out at 1977. Remember, my stop was at 1974. I didn't honor that stop. I got it at 1977, 2 cents off the bottom of that candle. And as you can see, that it didn't even last for that candle. It moved its way back up, made another spike up, and then it just continued to run. It never broke below that 20-day moving average. It never broke below my lows. It never took out my stop. It never took out my stop. I just blew the trade right there at the open. I got rattled just because I saw the big red candle. It looked like a failed breakout. There was a big red candle in there, and I went ahead and flattened out the trade, or I closed out the trade, and I took my loss. There was no reason for that. I was risking the exact amount that I always risk, 1% of my portfolio. It was all figured out to how many shares I was going to take. So I wasn't risking too much. I wasn't risking too little. If I got stopped out, I've been fine with that. But instead, I panicked and I moved my stop up, and I got taken out early, 3 cents above my stop. And as you can see, the market QCOR just ran up and ran up, took out new highs, pulled back, made a higher low. It never did come down and hit that 1974 area. So it actually made a higher low and then a higher high. Great sign of a nice uptrending stock. I should have been in on at least some of this, but unfortunately, my mind got to me and I just took out the loss too early. I didn't honor my stop. So when you're out there, figure out your risk before you take the trades. Figure out how many shares you need to honor that risk. Figure out where your stop is, where your target is, and try to stick to them. At least try to stick to the stock because those are important. They make sure that you're risking the right amount of money on each trade, and that is what they're there for. So you leave the stops in and make sure they're honored. If I would have said, oh, I should put my stop here at 1980 and I got stopped out, then I'd be like, okay, whatever. But I didn't, and I should have been in this trade making money. Instead, I had to take a loss on it. It was a loss that wasn't needed. It was a loss that should have been a gain. So make sure you're out there and you honor your stops because that's why we put them in, right? That's why we use them, is to make sure we honor them. So do that, and it should make you some money in the future. Hopefully you won't get stopped out or take premature losses like me.